Institution Mobile, quality e-learning experience on the go.
I know by now you should be familiar with the word exchange, but in the course of learning you get acquainted with the meaning of stock. Let's get started. Securities may involve stocks, shares, debentures, bond, hedge, and yield. Mostly, security exchange market is organized for investors to come buy and sell their security, such as shares and the rest. The first importance is there is a medium of raising capital. 2. It provides employment opportunities for youth in the societies. 3. It provides information to the investors, and as such, it enables them to know the particular company they are to invest in at any point in time. 4. It facilitates the transfer of investment. The very first function of stock exchange market is through the forces of demand and supply, the prices of security are being fixed. Second, there are provisions of rules and regulation as regard how the market will be organized and coordinated. 3. It provides a medium for raising funds either to the government or private institutions or individuals. Stock is an individual portion of accompanying capital owned by a shareholder. That is, it is the amount of interest a shareholder has in a company. Let's talk about debenture. Debenture is a long-term acknowledgement of debt. It doesn't go for a short time, it's a long-term acknowledgement of debt. And when we talk about debentures, it is generally to give loans to people, individuals, firms, and the rest of the people we have trading in the floor of the stock exchange. Let's talk about shares. Shares is a bundle of a capital which can be transferred from one person to another. That is, it is transferable. Let's talk about bond. Bond is usually issued by government or its agencies or private institutions. Let's talk about yield. Yield is a very safe security of oil. Why? Because it involves governmental organization. Government issues yield, and as such, you know, government can never owe you debt. That is why it is very safe. We have procedures of transaction in the stock exchange market. Not everybody is allowed to trade activities in the stock exchange market. We have two speculators that work on the stock exchange market, and they are the jobber and the broker. But the actual speculator of these two is the jobber man. He specializes in a particular type of security, and the broker acts as an agent of a particular client. And when there is demand from a client that I want to get security of this, I want to get security of that, the job of the broker is to go meet the jobber man and they negotiate. And when there's any traces that he wants to buy security, he gives him some documents. But before he gives him some documents, he gives him two types of price. You tell him this is the price the securities are going for. We have the lower price and the higher price. The difference between the lower and the higher price is the jobber's return. And when the jobber man sees that there's a trace that yes, this broker wants to get some securities from me, he then issue out some documents. We have the contract form and we have the transfer form. Contract note or transfer note. What's the essence of the contract note? The very essence of the contract note is to tell the client that a sale or a purchase has been made on his or her behalf. And the very essence of the transfer form is to transfer ownership. We could define speculation as the purchase of securities by speculators and making profitable resale of the securities. We have three speculators in the stock exchange market. They are the bull, the bear, and the stag. Who is the bull? Not the bull you're thinking about. Bull is a speculator who purchases or sells securities with the hope of a rise in price in the future time. So when the price is increased, he goes out, sell the securities he has at hand. And who is the stag? The stag is the person that buys new issue in large quantity in the exchange market. It's a market where buying and selling of security takes place. Buying and selling of securities take place in this market to enhance the stock exchange. Let's talk about the advantages. 1. It provides opportunities for buying and selling of security in the stock exchange market. 2. They assist and complement the activities of stock exchange. We're talking about the second-tier security market. So all they do is to assist stock exchange in whatsoever business activities they are doing. 3. It enhances the investments and develop the economy as a whole. Let's talk about the advantages of SSM, which is second-tier security market, to the investing public. 1. It provides an avenue for long-term investment. 2. It enables investors to assess the profitability of each organization in order to choose which of the company they will invest. 3. Which is the last advantage to the public investing. It provides opportunity to get them more acquainted with all the business activities that is done in the security stock exchange market. We have different operating regulation when it gets to speculation. 1. We have method of admission and the requirement for admission. And when we talk about the method of admission, we have offer for sale, offer by introduction, offer by placement, and lastly, offer by subscription. And when we talk about the requirements anybody has to get before it can be involved in second-tier security markets. 1. The company must be incorporated by public limited liability company. 2. The shareholders must not be less than 100. Now we're talking about the numbers of shareholders. The minimum numbers of shareholders should be 100. We could have above that, but the minimum number of shareholders should be 100. 3. The company must sign general undertakings with the security exchange market. And finally, the financial statement for 3 years of that particular company should have been submitted to the stock exchange market.
Fusion Mobile, quality e-learning experience on the go.